Been a busy week for Cathie Wood and Ark Invest. A number of announcements, a brand new ETF, more predictions coming from Cathie Wood. We'll talk a little bit about in this video, guys, what she has said, what she has predicted, and why maybe this time it actually means something a little more significant. Here's a look at what Reuters had to say as far as their new transparency ETF hitting the market for the first time. So a new product coming along for Ark. We have more predictions, guys, including Bitcoin. Yeah, she's talking about 500,000 again.
Yeah, and there's a lot of talk, and her video or her interview, she was talking about the market's concern is inflation, but she was arguing that that's not the biggest issue. The market is hasn't seen the fact that deflation could be a problem. And the more I listen to her talk about it, I'm like, that kind of really makes sense, because she was arguing that, because companies are trying to catch up to the demand that consumers have right now, that there's going to be a buildup of inventory at some point, which is going to expand next year or hit the market next year, which is going to be a deflationary issue, along with innovation, AI innovation, because that's her thing. AI innovation and whatnot. So the argument about deflation, when you think about it, it does make sense. Companies are trying to catch up. They're ramping up production, trying to build up inventory. And if demand were to fall off even a little bit, then you might have an oversupply, which could push down prices at an extreme level. But there seems to be a lot of buyers around. So, it's a grain of salt, take both sides of it. Inflation is a concern with current situations, but you also have to look forward to what the next possible problem is. Deflation could become a problem, but I don't think it's an immediate problem. I mean, we all have an opinion, and she's done very well for herself with her opinions on the future of things. Now, her CTRU, her transparency ETF, hasn't done so well since it's come out here. It's gone as high as about 2260 or so. This is the chart for the ETF here. 2060 or so, all the way up to 23 roughly, and here we are down at 19 and change. It's been trading for a couple days now. It's got to figure itself out as a stock for us to look at. As an investment piece, that's a different story, but as a stock for us to trade on an intraday basis, I would argue that we would have to get at least back above 21 to get things excited again. Now, as an investment piece, though, it does seem like there's a lot of overlap. Obviously, this one is more of a ESG focused fund, which is environmentally and socially social governance. So it's more companies that are geared towards watching their footprint, their carbon footprint, and environmental laws, labor laws to take care of their employees, and mental health as well, and then also governmental rules and whatnot. So it's more like honest companies, and part of that is Tesla. But because of the companies that would be put in that fund, I feel like there's a lot of overlap with her flagship fund and the CTRU. So you may be overexposed by going into both of them. And this may be why you're seeing a dip here in the actual fund itself. Obviously, it's gotten money invested in it, but at the same time, you may not be getting the same kind of inflows as you would have expected, because there seems to be a little bit of overlap between the companies that are in play here. But it is something to keep an eye on. ESG funds are hot things right now, not immediately, but it has been something in I want to say the last couple of years, at least 2-3 years or so, and it's definitely going to be something of the future, right? Everybody wants to be invested in a company that is socially conscious, socially aware, and taking care of their employees, also with the environment, with climate change being a hot topic right now. It's all part of the future, and that's where she's investing. She invests much further out in the future than, say, most other people would look. If they're looking 5 years out, she's looking much further than that. So definitely something of a fund to look at for the future, and technology and AI, because that is definitely her bread and butter, and she's going heavy in it with her two funds.
Yeah, and like you said there, I think we should double down on that. You understand that if you're invested in one of the ARK funds, like, you probably are going to have a lot of holdover. Like, if you show that CTRU, and I can quickly show you here. I mean, you can have Apple's in there, but you have Nvidia up at the top, Enphase, Cloudflare. But the actual, I love this website here. It's CATHIE'sARK.com, just to see what's been going on recently, because you talk about Tesla being in that CTRU as well. Well, it's also the number one in the flagship, right? You know Elon's been selling shares, and you know that's that's put some pressure on the flagship fund. In addition, all those growth names have been under pressure as well all year. It has not been the greatest performance. I mean, it's down. It was down about 10% in December and almost a full 25% on the year, Ark. But recently, what actually makes some sense is trimming some Tesla here recently, because it has gotten very overweight. So on the way down, little adjustments being made, buying some bottoms on things like Twitter, Teladoc, UiPath. So it's this theme where, and this is where it comes down to what I guess what you were saying there, Arun, where it's all about that long term. And obviously, Cathie Wood is thinking about that long term, because you're going to be picking up names which seem like you're catching a falling sword. But I suppose if you have an outlook that's 2 to 5 years or even longer than that, it changes the litmus here. But obviously, from just a simple technical standpoint, it has not been a fantastic year. You have already twice now broken through that 100 level and theoretical support in May, where a lot of stocks that were depressed had great bottoms here in May and have broken back out from these levels. And you're breaking back below this 100 mark and under a little bit of pressure going into the end of the year. Now, if your time frame is long enough, you have to remember and put things in context how strong a run this has been on over the last, since the 2020 bottom, right? Like this is a 30 to 160 move. So in that context, okay, the momentum is broken, but at the same time, you're still getting it well above some of these previous breakout prices. So, is it a time that you might nibble in if you're looking for something that you want to have long term, and you're not trying to pick and choose, if you believe in that thesis? And those are interesting points that she made about inflation and her outlook there. I don't 100% necessarily agree with them, but it's definitely food for thought, and I hadn't actually thought of it that way. But Ark, you'd like to see it back above that 100 level, but I like the fact that they're actually trimming some Tesla, because they're so overweight, some of these names, that you'd like to make sure they're maintaining that balance.
I got to understand the environment that we're in, obviously, and understand where we are overall in the market. As you said, 52-week lows took it through 100, straight to 90, now trying to bounce for the flagship fund. So not the right environment, but an interesting time and an interesting year for Cathie's Ark, guys.